This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, it's Joe, and I'm going to give you my update of the market I'm doing it Thursday night for Friday morning. I am going to go through all of the market conditions. I got pretty good feedback on that, so I want to continue to keep that up, and I do recommend you guys taking a snapshot when I get to that. And then I want to talk about something, a pretty big change in the market conditions for one. But then I also want to talk about multiple time frames. And I think a way for you to think about what's going on right now that I believe will help you make more sense of what's taking place. So kind of an important video today. So let's go ahead and get going on this. I don't want this to go too long. So in terms of the market conditions, I am going to go through the trend and the momentum in a minute. There wasn't any changes there. But as you'll see on the weekly, there is continued improvement. Now, when we get to the volatility, look at what's happened. We actually had, so I've already talked about how we flipped the trend over to the downside on the daily ATR, and this moving average is declining. And it's reminiscent of what we saw back here in the June-July bottom, and we had a pretty nice run and rally. And so it sort of looks like it's trying to play out the same way. Now, what's really intriguing me is that this time, look at what's taking place with the weekly ATR and the weekly moving average. We have officially broken the moving average and it has rolled over. So from that standpoint, it is declining right now. That is turning it positive. So both of those have turned positive. Now, just so you understand, when the volatility drops, that's a positive. That means that we're typically in a lower volatility environment, you're in a more bullish scenario. And when the volatility is going up, it's signs of distribution. Signs of volatility typically mean distribution. And that's more of a negative scenario. And you can see in times past when that has played out, when this line is rising versus when it's falling. So I wanted to make sure I pointed that out. Now, the OBOS is still around neutral. It's around 54, and that's 54%. So I would consider that to be neutral. And the sentiment dropped a little bit, and there were a few fewer bulls this week. We dropped from 42% down to 38% bulls. So as I said, what I think you need to take away from these bottom two columns, okay, number one, when we get down into kind of an oversold territory, now this didn't reach oversold, but it had divergence. You see how this got down pretty low and this made a higher low versus the price. So that's one thing. And down here at the low, in both cases, we're at negative 19%, okay? Both times, well, right in that area, 19% negative. Now we've gotten to +7 on this rally. When we peaked up here, I think it was around +15, 16, 17, something like that. But what I'm actually focusing in on are the bulls. If the bulls get up into the 50s, low to mid 50s, I think that would be a warning sign that we're probably hitting some kind of an intermediate term peak. So that's in terms of this bottom stage. What I'm trying to point out here is that what we're looking for, see, these were both positive at the bottom. When we got down here, we had a lot of bears and we had an oversold-ish reading. So when we have that, that's telling us what the potential is from a short to intermediate term standpoint. What kind of a rally can we get? It's not really, these two are not really related to the trend. Okay, so that's how I want you to look at this. Now, if we move up and we come up to this region up in here, and these are both negative, right? Overbought, and the sentiment goes more bullish, then we know even if all of this is improved and everything's positive, then we know we have short-term risk for a pullback or something like that, even if it's inside the trend. Okay, so that's how I want you to look at these. That's why they're separated and down at the bottom. But the most improving thing that's taking place here is the volatility taking place on the weekly. I think that's a pretty big deal, especially now that we are above the 40-week. All right, now I want to cover a couple things. First of all, I want to talk about this multi-line chart. This is my 18 chart, right? I've got all the 18s lined up here. And the main thing I want to point out is volatility is dropping, okay? But we're in a high volatility environment, even though the volatility is down. And I want you to understand what I mean by this. So if you go back and look at, even if we look at historically speaking, look at what happened in 2020 after we bottomed, we turned up. We were respecting on a pullback. We were getting pullbacks to the 18-week that were being respected. Even these, I didn't point these out. We were respecting the 18-week. You notice how we were not respecting the 18-day? You see how all these overruns of the 18-day, you see the volatility? It just wasn't, the volatility was actually less because it was focusing in on the bigger time frame, okay? Now we're focusing and we're not really respecting the 18-week, we're respecting the 18-day. Look at all these reversals. So this is a decline, a failure at a declining 18-day, another one here, another one here, another one here, another one here, another failure at this line here. So, and then we start to show respect for it to the upside. And then we come back and fail at it here, fail at it here, fail at it here. Now, look at the last 3 times. We've pulled back to a rising 18. We're respecting it, respecting it, respecting it. So when we get into an environment that has more volatility, more swings, obviously the 18-day is the driver right now. This is the driver. This is the time frame that's kind of the one that's telling us what's really taking place right now. So until we can break through this 18-month really and get the 18-week to rally up and price to respect that, we have to watch the 18-day right now. So if we keep respecting the 18-day and we keep working our way through this moving average, then great, then we're turning the bigger trend around. We don't have to guess. If this market keeps respecting the 18 and it keeps going up here, then we know we're turning the bigger trend around. Right now, we've turned the intermediate term trend, or it looks like we are, but we haven't turned the bigger picture around, and that's obviously our next problem area. Look at how these lines, we found support at the quarterly line, and now we're rallying up, just like we did the last time, we're rallying back up to the 18-month line, and we're going to see how it reacts there. But if we fail, let's say we fail at the 18-day now. So failure at the 18-day would be this line actually rolling, not just breaking it in a minor way, but actually break it and then close below and then follow through with that and get this line to kind of roll over. If that happens, then we're breaking the 18-day line. And if we break the 18-day line below the 18-month, I would view that as being kind of like the next negative. Don't get overly consumed with this 40-week because if you can see, we're overrunning it. We're not really respecting it. We haven't really respected the 18-week because we're in a bear market, so we have a higher volatility environment, lots more swings, lots more movement. I hope this really helps you understand, even though the ATR is dropping, I want you to understand how there's more volatility in the price structure, all right? So I wanted to cover that. Let's go ahead, and I want to show you one other thing. So there's a big difference for me in what's taking place. Now, if we look at what's happening on the bigger picture, using this price structure now, this is a part of the course. I go into the zigzag and I do a lot of in-depth discussions on how to use the zigzags in your favor to clarify price structure. But let's just look at how the weekly chart is making lower highs and lower lows. Yeah, it had divergence. Yeah, we're getting a pretty good rally here, but we don't have any change in trend taking place. We don't even have a break of a trend line yet on the weekly chart. What we have on this time frame, we had divergence here. So, you know, we're starting to look at this and we get our undercut, and then look at what takes place. We have, again, what you can learn from the course is we have this change in trend that takes place coming back up through here. So we went to a new low, to a new high, made a higher low, and then took out this. Now, there were earlier signals. There was a pinch play here and a pinch play here that you could have been anticipating as buy signals because we had divergence on this time frame, this divergence with MACD making a higher bottom. And I told you that based on what I was seeing in the MACD signal and the fact that we had dropped down and it was kind of like an undercut, that even though the ADX was pretty strong bearish, that we should expect some kind of a rally, okay? Now, I wanted to point this out because this one has actually changed the trend. We broke the trend line, we tested the low, and we turned back to the upside. We got our 1, 2, 3. We never had a 1, 2, 3 on this time frame. If you look at the trend line break, we broke this trend line and then we went to a new low. And then if we draw our next trend line, we only went up and then we never got confirmation. We actually had failure when it rallied up and turned back down. This was a 1, 2, 3 failure right here for continuation to the downside. And then we got a real reversal. So to me, this rally is, even though this went higher, the structural pattern in this is much better. Now, this is happening on a daily chart, okay? The weekly chart isn't showing us anything. So when we go and look at the different time frames, we have to realize what time frame is in command right now. Right now, the daily is in command. You see how these moving averages, the 18 is above the 40 and both lines are rising, and now we're respecting these moving averages, we're respecting this 18. So this is in command. Now, how long does that last? I don't really know. I mean, this could go up for another couple days and then start breaking the 18 and roll over. But right now, this one's in control. We have a neutral pattern here and a neutral pattern here. This is going one way, this is going the other. This is going one way, this is going the other. Now, the good news is we got back through both moving averages on the weekly chart, and that confirms what we're seeing in the divergence. We're also seeing the ADX drop down and get pretty low, showing that the bears have really lost command here. They were in pretty strong command, but we had divergence. And whenever we have a divergent bottom that goes below 25, that causes the ADX to drop below 25, then we know we're probably getting some kind of a reversal pattern. And I think the highest probability is for a test of this high. That test coincides with the 18-month line. All right, now when we look at the momentum conditions, the only really thing we have in our favor on the higher time frames is that this came down and undercut this low. So we have this reverse divergence pattern, because if I look at this, we had the higher bottom and this made a lower bottom. So when this divergence showed up here, this becomes more important, this reverse divergence. So let me just put it to you this way. If we have reverse divergence here, but this one goes to a new low and this goes to a new low, then this means nothing to me. Okay, but if I have reverse divergence on this time frame and then standard divergence on this time frame, now all of a sudden this starts to have a little bit more meaning, and it tells me that, yeah, we could have a pretty good rally back up towards the 18-month. And I think that's where we're headed. I think we want to go back to the 18-month line. Now, one thing I recommend you guys do is watch the show on Stock Charts TV. I put out Thursdays. It's a 25-minute show. I go through a lot of stock requests. So if you have individual stocks and you want my opinion on, you can send me the tickers, 2 or 3 tickers or whatever tickers you're interested in, and I'll try and I'll end up putting those in and go through them and give the analysis on what I'm seeing on there, so you're aware. But I also talk about the market usually in some way, shape, or form. And the point I made today on here is that 4,000 is this level, 400 on the spider, 4,000 in the S&P. We had this big green bar moving to the upside, getting back above 4,000. I don't want to see that erased. I don't want to see us give back more than 50% of this big green bar. If we do that tomorrow, we have news coming tomorrow on, it'll be, for when you guys are seeing this, it'll be Friday morning. We don't want to erase what's taking place on Wednesday. Okay, so I know we got economic data coming every day. So if there's bad news and we erase this like this, then this is kind of like a false breakout, and we probably get this MACD to cross over, and then we got a little risk back down to the 0 line or something like that. Now, my feeling is that that's probably not what's going to play out here. And the reason why I'm saying that is we're getting confirmation in green DI as we go to new highs. We're getting green DI to confirm. Volume action has been very good here. Look at the volume bars since the low. Look at all of these green volume bars. We didn't have that here. Just didn't have the same kind of strength in the volume on the S&P, at least on the spider. And since this low, I think this is just a better bottom based on some accumulation days. So these are good things, I think, to keep in mind and watch. Now, lastly, look at what's taken place in the the volume and the ADX on the hourly chart. I mean, that's a really nice breakout. It would suggest, not mean for sure, but suggests to me that we've got more upside continuation coming based on this. So we've got to know our 18 lines. We got to know where this one is. We got to know where this one is. Got to know where this one is right now, more important than any of them. And then you got to know where this is. And as long as you know where all those are, you know where your key levels are to watch for reversals. And that's why I like that timeline chart so much. We know where our next resistance level is 4240. We got through this intermediate term resistance number, tested it a few times, and now broke away. So the highest probability is we're going up towards 4240. So hopefully this was helpful. Go ahead and post any questions or comments. Thanks.